Welcome back, trendsetters, to You Are the Bank. And today I'm going to be talking about protecting the family assets. So you can have a growing small business and be working hard, trying to get customers, develop your HR, bring in your people, grow and look after them and keep doing that. However, if you're not protecting your family assets in a growing small business, yep, you've got the old rocks in your head. So protecting your family assets, what are we talking about? Well, folks, we're talking about these four things. Number one, make sure that you have your business and your family assets within a company. Now, that can be a trading company or it can be the trustee company of a family trust. It's really important. And it's important, folks, because a trustee company or a trading company has limited liability to the directors of that company if and only if the director has done the right thing. Okay, so the director of the company running the business needs to be the working person in the business. So trustee companies and companies need to run the business and hold family assets. That's the number one thing. The number two thing is make sure that your private home is in the non-working partner's name in the personal relationship. So what does that mean? It means that the director of the company that's running the business, that person should not own the home, the family home basically, or the private home. So the non-working person needs to own that home. Now relax, folks, just sit back, relax. I know some will jump out and say, well, wait a minute, that non-working person can just take off if things go bad and own the home. No. The family law in Australia is so strong that if there is a personal relationship split, those assets are looked at from a family law perspective, and the ownership of the assets, whether they're in a super fund, a trust, a company, a person's name, whoever the directors are, it doesn't matter because family law overrides everything. So don't worry. You need to put the non-working person or non-working director in the business. The family home or private home needs to be in their name. Another very good reason why the family home needs to be in a personal name is not just to protect the family assets, but should be in a personal name so that you can get the CGT relief if you sell that home. So what I mean by that is if for the family home or the personal home, if you sell it one day, there is no tax as long as it is in an individual's name. So non-working person's name for the family home. The third way to protect the assets is to make sure that the working person, the working director, there are no assets in their name. So the working director may have a property in their name for when they were younger. You're probably reluctant to move that, but get tax advice because there can be stamp duty and capital gains tax. But generally with our clients, that person, the working director, might have a couple of growth assets in their name, but from then on, as the business grows, nothing goes into the working director's personal name. Okay, all of the growth assets should be in the non-working person's name. I just mentioned the family home, or all other growth assets in that person's name, or an entity's name which the company protects. Very important. The fourth thing that you need to do to protect your private assets is insurance. I'll say that again just so you remember it. Insurance. And I'm talking about personal insurance. So that is life insurance, income protection insurance, trauma insurance, and disability insurance. All right. You need to have insurance if you're in a growing small business, your own insurance, because the biggest asset in a growing small business for you and your family is the personal relationship that's growing, that the working director and the supportive person as well in the partnership. So make sure, especially the working director, you get risk insurance looked at and locked away. If you're in a business with another family, make sure you get insurance on each other. It's really important, folks. Insurance. We don't see enough people doing that in a growing small business to protect their private assets. So there you have it, folks. Before you can set up your bank and make it work for you, make sure you're protecting your private assets. So that is personal home or family home in the non-working person's name, Make sure you're using a company, either trustee company or trading company, to protect the personal assets by having that as a company running the business. The third one is the working director. Don't have any growth asset in their name. And the fourth thing is make sure you deliver on getting risk insurances in place. And those four things are a big key to protecting the family assets. So you are the bank. That's the third part in this series. Sorry, the second part in this series. We've got 2 more to come, but make sure that's a key plank for you to protect your family assets before you're putting dough in to set up your bank. I'm Pat Mannix.